I want to bring in Wells Fargo's head of currency strategy and Bloomberg Best, Nick Bennenbroek. Nick, great to have you back. And, you know, Sarah was just going over through, obviously, the currency moves and what's going on with the euro. At what point, though, as the euro falls, at what point do we start talking about even the survival of this currency?
Oh, I still think that's really a long way away, or really a non-issue at this point. I mean, we can talk about default, I think. That's one issue, but I think the survival of the Greek default, that's a possibility. But I still believe that, the survival of the euro and all the current members, it's going to be with us. And, we're talking 5-10 years.
Why is that? Why are you so convinced about that?
Well, I think because, A, there's a lot of political will. We went through the whole process of the common European economic area, and the whole process started back in the 1950s. It took us 40 years to get to the euro in terms of the launch of the euro. So I don't think it's going to fall apart at the first moment of stress. And also I think the costs of the euro breaking up in terms of the economic cost to a country like Greece, or even an economic country like Germany.
And the political costs as well.
So the economic and political costs are very high. It's actually probably, it could be just as painful for the euro to break up than to try and find a solution, as difficult as it's proving to be.
The euro's already fallen to record lows, against the yen on this pricing in of a Greek default. Now everyone's worried about what's going on in Italy. If we see things worsen much more in Italy, where is the euro headed then?
Well, I think the euro is probably continuing to head down, because what we're really seeing is the reaction to the latest headlines. But there's a lot of other bad news out there. The economy itself is starting to slow, confidence is falling, and we'll probably get European Central Bank easing before too long. I mean, there's been a very significant shift. So I think that's an accumulation of bad news. We could easily be at 130 before the end of this year, and over a period of years, down to 120 and 115, those types of numbers. Okay.
What does that mean for the safe haven currencies that have been wreaking havoc in many ways in some of these economies? I'm talking about the Swiss franc and the Japanese yen and even the dollar to some extent.
Well, I think for the next month or two, the safe haven currencies should probably do quite well, especially the next month. And the reason for that is that we probably are going to have this turmoil and volatility with us for a while until we see the authorities get their act together. So the two safe havens that we like the best right now are the US dollar, and the US dollar is doing pretty well against a range of currencies, a lot of the emerging and commodity currencies right now. We also like the Japanese yen. Not that we think the yen will strengthen against the US dollar. We've got the threat of intervention there.
Right.
But the fact that the yen can hold steady against the dollar and those two can move stronger together, those are the places to be.
Could you get off guard holding the yen, with intervention? Could you get caught off guard there?
You could, but overall, I think it's probably going to be squeezed between relatively narrow ranges, maybe in the 76 to 78 range. You could get Japanese intervention when we're down at that dollar-yen rate of 76. Maybe it'll pop up to 78, 78.50. But with the stress in the markets, we really think it's going to remain in that tight range.
Okay, Nick, thank you.